So if you're trying to figure out where mortgage rates go, you need to watch two things. You need to watch the things that the Federal Reserve watches. They watch jobs and they watch inflation. So we know where inflation's at, but today we got a jobs report. I'm going to go over that, and then I'm going to explain to you guys how maybe a weaker jobs market might be exactly what we need from the Fed. A little confused? Well, let's get to today's show, folks. So my name is Dan Frio. I'm the host of the Rate Update. Each day when I come in, I like to start my day with the chart, and I'll go through this real fast because I got to get to the news. All you have to understand is that number right up through there. If it's red, that's not good news. It means mortgage rates are going to go up. The bigger the number, well, the bigger the adjustment. It's really not moving today, which is a surprise because we got ADP payroll numbers. It's telling us how robust the jobs market is. So if we actually dig into the Federal Reserve, what do? What are they here for? Well, they were created for two mandates. They were created to keep inflation in check. They're doing a pretty bad job at that. But they're also keeping the unemployment rate under 5% because that is basically what they call full employment. Then we got a GDP that's showing us how robust the economy's growing. So it's growing pretty good. We've up to now had a pretty darn good jobs market, and the inflation's been the critical point at this point. But today we're starting to look at the unemployment numbers, and the employment numbers are starting to not look so good. So let's take a deep dive into that and figure out where rates are going to go today. Because if we have a good jobs report, that means the Federal Reserve can hold rates longer. But if the jobs market starts to weaken, well, they'll be pretty much forced to do nothing or cut. That could be good news. So let's get over to the economic calendar we have for today. And so the last reading came in at 19,800 people got jobs in the previous week. This time it came in at 16.5. That's not really a good jobs report. And if you go back over the last month, starting back in June, we can see the jobs market's not looking too good based on ADP. So we had at the beginning of June, there was about 30,000 jobs created. The next week, 29, then 26, jumped back to 30. Now we're down to 21. So we're going to pay attention to this, but on Thursday, we're going to get initial jobless claims and continued claims. That's from the government. We can put a little more credence in these. We want to see if people are losing their job, can they get jobs back? Because continued jobless claims as they grow, that's not good for our economy. So let's get over to see where the market's taking us the rest of today. And the main things we're going to look at is oil, the direction that's going to tell us inflation. Okay, oil's up $1 a barrel. Remember, this actually was down in the $60 range about 2 weeks ago. Rates started coming down, and then Iran did it again. The bombing started once again, and oil prices are spiking. So the higher this goes, the higher rates are going to go. So you might be thinking, okay, what do I do now? Okay, oil prices are all over the map. So if we bomb, oil prices go up, and then rates are going to go up, right? Well, here's what I need you guys to do. You have to pay attention to all these things, and the best thing I can do is do two things for me. Watch oil and subscribe to my channel. Because every day, probably within 5 minutes, I'm going to explain to you guys all the economic news you need to know for the day. I'm also going to give you what I'm advising my clients, and I'm also going to give you tools if you're a owner or home buyer. So what am I advising my clients right now? Well, if you come in with a contract, I'm locking you in because I can't afford for one day to rates jump up 1/8% or 1/4%. That'll put your payment possibly out of range. But if you're looking to, buy down the road or you're looking to build, just watch oil. As oil starts its descent, and it will initially at some point, and it starts its descent, you'll see rates coming down. But what is going to be really the thing that you need to pay attention to is Iran going to stay by the rules. So the longer they stay with the rules, the lower oil prices are going to go and stay. And that means interest rates are going to start coming down as well. So it's going to take Iran sticking with the plan for about 30 or 45 days, and that only is what's going to actually bring down rates. So if you want to track these things, make sure you join my channel. Well, does it make sense to refinance? Does it make sense to buy a house today? How much is your mortgage payment going to be? All those questions can be answered right through here. Down below is a free store that we have. It's called the Stand Store. So if you're looking to try to buy a house, you want to say, well, what would that payment be? Well, you can figure it out right through there. If you're trying to figure out what program was most likely the best fit for you, if you're looking to buy that first house, well, you got these programs up through here. What if you're a homeowner? Basically, you married the house and dated the rate. What should you do? Should you refinance? Does it make sense? Well, we got tools for you down through here. But if you just want me to track your rates for you, let's go to my website. These are for homeowners. If you're a homeowner, I need you to put your mortgage information right up through there. What we're going to do is we're going to track your rate. So when your rate drops to a certain percentage that you want it to, we'll call you, text you, and email you. We'll go through the numbers, see if it makes sense. But what you can do in that is you're going to be able to do a lot of the other tools. You're going to be able to say, Dan, okay, when my payment drops 200-300 points, reach out to me. When my LTV goes down to 80% and I can eliminate that PMI, reach out because it might save me $200-300 a month. So you want me to track your mortgage, your rate, your payments? Check it out right through there. So folks, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer. I've been doing this for 38 years. I work at a bank that gives me licensing in with all 50 states as well as Puerto Rico. But the cool thing is I created this a couple years ago. It's one application, one credit pool. We're going to compare your loan with 30, almost 40 different lenders. And here's why. When you go out there, you're like, okay, these lenders might have better rates. These might have different programs. These might have specials. Wonder if you can scan them all. Well, that's what we can do for you. I'm set up with almost 40 different lenders to do all the heavy lifting for you. So if you can do this on your own, God bless you. If you need my help, please get the best loan estimate you have or just reach out to us. But if you already got a loan estimate, plug it right into there. What I'm going to do is I'm going to send you a video, personalized back to you. I'm going to go over what your rate would be and what your fees would be. If we beat the other competition on both of those, I'm hoping to win you as a client. In 8 days, what is the Fed going to do? Well, this is saying there is an 83% chance they're not going to do anything. But here's the scary thing. Remember, we took a snapshot of this yesterday? I said, watch this throughout the week and watch it next week. Because what they're saying is not this meeting, but that in the next meeting, there's over a 50% chance the Federal Reserve is going to increase rates. Then as soon as we hit into 2027, they're going to do it again. So they're saying in the next year, we're going to have at least 2 rate increases from the Fed. I'm saying they're not going to do anything. They're not going to do anything at this meeting, nor the next meeting, nor any other meeting this year. And the only thing they're going to do is once the inflation starts to drop because of oil, they're going to be poised to cut rates. So I'm completely on the other side of all this. Let me know down below if you think I'm crazy or you think I'm onto something. And if you need some help, I'd love to help you out. If you need a mortgage anywhere out in the country, if you're looking to buy or refinance, we can help you make it make sense and get you into the right program. So let's end our day with the chart. So the chart is down 5 ticks. That basically means mortgage rates aren't really going to do anything yet. We need this down at least 10 points to really do anything. So I'm saying really with this ADP payroll coming out today, it was a little bit of a shocker. But I'm saying based on this information, rates aren't going to do anything today. They're not going to do anything in Tuesday or Wednesday. But Thursday, we're going to get that jobs report, and that might be a market mover. So if you do anything this week, make sure you plug in on Thursday to see how this jobs report number comes from the federal government and how these affects mortgage rates in the coming days. So that's my report for today, folks. If you need some help with the mortgage, I'd love to help you out. Otherwise, mortgage rates, they're going to stay steady from here, but I don't like at these elevated levels. Watch oil and watch jobs. It's going to tell you where rates are going. Thanks for watching. God bless. Have a fantastic afternoon. See you back here tomorrow morning at the opening bell to let you know what's going to go on with these. And the most important thing is the whys behind it. Thanks for watching. God bless. Bye-bye.